everybody, it's Kevin from NorthStarBadCharts.com, and I hope you're all doing well. I want to talk to you about the US dollar and the US dollar index. It's important that you don't confuse the two. The US dollar, of course, is the currency of the United States, and the US dollar index, often referred to as DXY or Dixie, is an index that measures the relative strength of the US dollar versus a basket of global currencies, primarily actually the British pound, the euro, Japanese yen, a couple of others in there as well. But there's a couple of major things that we need to put into context here, and it's really important if you're analysing the movement of the US dollar and the US dollar index. So the US dollar index today is currently around about 102. People often talk about how precious metals tend to go down when the dollar goes up and tend to go up when the dollar index goes down. See, even I did it there, talking about the dollar and the dollar index. It's easy to get the two kind of mixed up when you're trying to talk about specifically the US dollar or specifically the dollar index. So you've got to be extremely careful, even though I make that mistake. So the US dollar index going up is often thought to put pressure on the price of gold. But one thing to point out is that back in 2008, the US dollar index was around about 70, 72 or something like that. Gold was about $850, I think. US dollar index now is much higher, and yet gold has more than doubled in price, doubled in value in US dollars. So it's not true over time to say that the US dollar index rising is going to have an adverse effect on gold. As you can see, throughout this entire period from 2008 to today, the US dollar index has risen, but so has gold. So that is an old wives' tale that we can put to bed straight away. It may have impacts on a short time frame, but over time, gold isn't measuring the movement of the US dollar index. Gold is measuring your loss of purchasing power. So gold tracks your loss of purchasing power. And that's where the US dollar index comes into all of this, because the US dollar index in isolation is one thing, and you can see that it's been fluctuating broadly between about, let's say, 120 and somewhere down near around about 80. So 90% of the time, the US dollar is between those values, between 80 and 120. And that's a range of strength and weakness values of the US dollar versus those other currencies that I mentioned. Now, we've got a major resistance line and a major support line that you can see here. And the only time the US dollar index has been outside of that was during this sort of blow off top in the 1980s. And we had a very, very powerful move that busted right out of this major resistance line. And I view that at the moment as a false breakout. So when drawing charts, be very careful about including that peak at over 160, because to my mind, that was not representative, primarily because the US dollar had come off of the gold standard. So this was a huge reaction to that, which carried the US dollar index and the strength of the dollar artificially high, is how I'm interpreting this. So you end up with a very, very steep bearish rising wedge. And as technical chart analysts will know, there's only one thing that tends to happen with bearish rising wedges, and that's they break down. Of course, this broke down, led into a major bearish move for the US dollar index, which put in place the major support line, turned up, and we had another bearish rising wedge that rose up to around about 117, 118, 120, that kind of area during the early 2000s. I think it was 2001, 2002 there. We then broke down, as happens from bearish rising wedges, came all the way down to 2008, touched the major support line again, and we've been trending up ever since 2008. Now, the US dollar index does have a measurable cyclical behavior, but it kind of behaved a little bit oddly over the last few years, and there's some debate amongst psychoanalysts about why that is and just exactly how to deal with that. But when you take it right back to basics, we're in another bearish rising wedge, and that's probably about all you need to know. The upside maximum possibility on the major resistance line is highlighted in green here. We have actually hit that major resistance line, so there's probably no need to go back and revisit it over the next few years. We're breaking down at the moment from a support line, and we're heading down towards what's called the sleep mode line. Any break below the sleep mode line leads us into a major bear trend for the US dollar index, and there's a number of possible downside objectives. The main ones are labeled B and C on the chart here, with some representative times and values on there, which are just, at the moment, just estimations. Now, if we hit zone A and bounce up, then it increases the probability that the US dollar index is going to challenge that green shaded area again. Now we've got one final horizontal or major horizontal support level sitting at just over 102, and if we break below that, then I think we're headed down to somewhere in the region of where I'll put the letter A there. Okay, so that's the US dollar index, and in isolation that is one thing, but you really need to consider the US dollar index in the context of the world around us. So okay, the US dollar index is bouncing up and down between some sort of support and resistance lines. It's contained within a range, if you like. But think about what the US dollar index is. It's a basket of currencies: the US dollar, the pound, the euro, the yen. And what's happening to those currencies? They are all, every single one of them, being eroded through inflation. The purchasing power of all of those currencies has diminished enormously over time, in excess of 95%. In fact, I think the US dollar is probably up to around about having lost around about 98% of its purchasing power since the US dollar was brought into being. So having lost 98% of its purchasing power, then to an extent the US dollar index is a little bit, I won't say irrelevant, but it's kind of secondary to this next chart that I'm about to show you. And this is way more important, I think. It's the US dollar index versus inflation. So this is measuring how that number between 80 and 120, whatever it is, how that number sits versus background inflation. And we're using PPI for all commodities as a proxy for inflation here. So this is the US dollar index versus PPI over time. So that number that represents the US dollar's strength or weakness versus those other currencies pales into insignificance when you look at how this chart has just descended over time and continues to descend, and it always will descend unless you get currency revaluation. It's always going to break to the downside because you always have inflation. If inflation PPI eases off for a while and the US dollar index has some relative strength, then you can have a period of gains on this chart, but it will always break to the downside because there will always be periods of increased inflation and US dollar weakness, which completely overwhelms any short-term gains. And this is why gold will move up over time regardless of what the US dollar index does. This is a chart that explains why that happens. It's because the US dollar index and all the currencies contained within that basket of toilet paper, they're all being eroded by inflation. Your dollar in your pocket, your pound, your euro, your yen, year on year, decade after decade, will purchase less and less. And that is what gold is measuring. Gold is measuring your loss of purchasing power, and that's displayed on this chart. And as you can see here, as an example, DXY was 72 15 years ago, and gold was 850. DXY is now 102, so it's gone up 30. So DXY has gone up a very large amount, but gold is now more than double what it was when DXY was 72. So DXY rising has not prevented gold from rising because, as I say, I'll say it again, gold is measuring loss of purchasing power, not the movement of the US dollar index. Okay, I hope that has helped to clarify the US dollar index, gold, and gold price appreciation for you. Plenty more, of course, at the website for our members. But if you enjoyed that, why not think about coming across and having a look? But from me for now, that's it. Bye bye.